Folks, we're back, and that is right. It is an important one. We're talking about Google and or Alphabet stock, whatever you'd like to call it, okay? Most of us just talk about Alphabet as Google because that is really the main company here that we're talking about. We're going to look at Google's earnings today. As you see, negativity all over the stock today. 3.5% downward in the normal trading session. 2.5% after hours was even worse. Look, this stock fell around 6.5% at one point through these earnings. As a result, now sitting around 2.5%. And you got to wonder why this is the case. And this caused a ripple effect. You look at other peers that make money similar to what Google does. Facebook fell on 2.5% after hours after a 3% downward trading day. I mean, look, I'm just telling you right now, based off the appearance, you might suspect this is a negative earnings report. There's a lot to consider here. We've had a lot of concerns that people, analysts, quote unquote, who are terrible at their jobs, have said about a potential of a horrible quarter when we're talking about an ad perspective, because markets are tightening, less money being spent on ads from businesses. So we're going to see what that looks like. Is it the case? I don't know. But this tells a lot about some future, really, of companies like this that are making money off of ads. So this is a fantastic, really, guideline for us. Year to date, Google down 18%. Let me just tell you, it's rough stuff out here. On the year, that's right, 1 year out, Google has only provided shareholders 3.5% of gain over the last year. But over the last 5% now, kind of disappointing. 150% over the past 5 years is a very fantastic line, but it could be so much more when you consider the fact that this last year has been horrible, and really year to date quite negative as well. I mean, you look from their high points in November of last year, we're down nearly 21%. There's a lot of negativity here, as it's down nearly $700 from its 52-week high. So it is darn close to its 52-week low as well. So let's look at these earnings and see what we can deduce from this. Now, Microsoft were wrong, but look, I think this data is accurate. GAAP EPS line of $24.62. You may ask why that's a massive line. It's because there's a lot less shares outstanding, which is why you see the share price so expensive. There's a lot less shares outstanding, so this EPS line makes a lot more sense being $24. But this was a miss by $1.14. Quite a miss on a profitability standpoint. Now, this is not necessarily a shocker, right? We're seeing this kind of as a ripple effect throughout the market. Profitability is getting hit quite hard at a lot of companies right now. There's a lot of things impacting that. And, I think it's par for the course. I'm a lot more concerned with the revenue line when I look at Google at these levels. Revenue came in at $68 billion, was up 23% year over year, beats by $140 million. Now that, folks, is a number I like quite a bit. What does that tell me? That means we're still showing good growth in ad rates, folks. Despite what these garbage analysts say, we're showing good numbers. And I actually think this is a good thing. I don't necessarily know why the stock sees negative sentiment because of this. If it's just from a profitability standpoint, I just don't get it. There's a lot of great news to come out of this earnings. And you're going to see it right flipping here at the bottom right here. That's right. The board of directors has authorized a repurchase of an additional, folks, I'm going to highlight this for you, $70 billion. $70 billion? Can you believe $70 billion they've just got to spend? That's their whole quarter of frickin' revenue. They're just going to buy $70 billion worth of share. This is fantastic for shareholders. The board of directors knows these shares are dirt cheap, and they're buying them up, folks. I don't know. I mean, if that's not enough for this stock to even stay neutral in after hours after this report, this market is just, it's screwed, folks. It's screwed right now. Oops, I zoomed down a little bit. So let's take a look at these earnings. We're going to zoom in just a little bit for you and see what we got from Mr. Sundar Pichai here. He specifically said that quarter one saw strong growth in search and cloud, in particular, which are both helping people and businesses as digital transformation continues. We'll keep investing in great products and services and creating opportunities for partners and local communities around the world. Look at you, Sundar Pichai. Go ahead. But let's look at some of these lines here. We look at the revenue line. Obviously, we saw this. This is against a $55.3 billion line of a year ago. In my perspective, growing $13 billion of revenue in the span of a year, that's pretty significant to grow your quarterly revenue that much in the span of a year. Maybe that's just me. You saw last year that represented 34%. This year represents 23%. A little bit slowing growth rates, I get it. But that's a massive growth. That's a massive growth. What can I say? Operating income also saw some pretty good growth here. $16.4 billion the year prior, $20 billion here. And from a net income line, see, this is where you see it get hurt a little bit. It's from this other income or expenses line here, which I'll obviously dig a little deeper into there. But this net income did decrease year over year by around $1.5 billion, right around that line, 17.9, compared to this year of 16.4. So it makes sense. I get a little bit of negative sentiment, but I just overall, I look at the broader picture and I like where the company's headed. I really do. Let's look at some other by segment data. This is an exciting one because this is one I'm really focused on. Google search and other. This looks beautiful for ad rates, if you ask me. 31.8 last year, 39.6 this year. YouTube ads, that's right, 6 billion last year, 6.8 this year. This tells me great things about some of these companies reporting later this week that are primarily focused on ads to make revenue. It makes me feel good about them. I can't lie to you. Google advertising as a whole, obviously that includes the Google network too here, 44.6 compared to 54.6. That's significant growth year over year. Over $10 billion growth just from the advertising segment there, which is pretty nice. And then from an other perspective, grew by around 400 million. Nothing significant there, but we'll take that, right? Google Cloud saw a nice growth here, around $2 billion. Obviously not one of their main segments here, but Google Cloud, obviously a massive segment for the future as we talk about cloud really taking over the industry. This is a significant aspect of a lot of these tech companies' focus right now is cloud services being the one. They want to be a great provider of cloud services, right? There's a lot of revenue in this segment, and it's really just now being addressed. There's a huge addressable market here, and they're all fighting for it, okay? They are all fighting for it. Number of employees rose quite a bit too, and I think this is something you could definitely pin on expenses. There's no doubt here when you're talking about 140,000 of the year prior, now sitting at 163,000, 164,000. That's a big increase in employees, and that's obviously going to impact you. Not only that, because we're also somehow continuing to raise wages because of these entitled piece of garbage workers who threat unionizing because $18 an hour flipping burgers isn't enough for them because they're absolutely entitled and have never worked for a thing in their life. Sorry, folks. Just wish people would get jobs. People really are just entitled nowadays, unfortunately. Probably the worst thing to come out of 2020. There's a lot of people dying, I get that, but the entitlement, it's kind of ruining the entire nation, folks. So that could be worse when we all, collapse this entire economy and destroy everyone's lives. Could be a little worse, but that's fine. Stock repurchase program, obviously we talked about that, which we like a lot, folks. They did not post guidance on this, right? They did not post guidance here on the press release. Nothing crazy. It is a tough market to really predict guidance when you're talking about a EPS standpoint, so I get that. I really do. But we do have a balance sheet to look at, and we will look at it, folks. We will look at it. Now, it's disappointing because it's only a 3-month comparison, but we will still enjoy it nonetheless. Total current assets at $188.1 billion. Last year, not even last year, it technically was last year, but 3 months ago, now sitting at 177.8. Quite the decline here. And my presumption is there was a little bit of payoff of a current liabilities, I would presume. Hopefully, and potentially maybe some long-term, you would hope so, or maybe they converted some of that into long-term. We'll see here. 359 of a year ago in total assets, now sitting at 357. Slight overall decline there. You see this property and equipment line did increase, but we saw a decrease. Not really significant decrease here. It was just everything's pretty similar. Just this total current asset line is kind of what fell there. The cash position shrank a decent bit, and accounts receivable shrank quite a bit. So total current liabilities sitting at 61.9 right now, compared to 64. So they did shrink that line a little bit. The accrued compensation and benefits is a decrease here. Accounts payable, they paid off some of that, and that is nice to see from a total liability standpoint. It is a pleasure to see a decline here, $103 billion compared to $107.6. So some of these assets that get converted into paying off this long-term debt stayed relatively flat. Really didn't make any budget there, but they didn't budget at all. But look, this is a company with really, in the grand scheme, no long-term debt. I'm just being 100% honest with you. When you're talking about a company with $350 billion of assets and only $14 billion of long-term debt, that is no debt for them, right? They could pay that off. That's chump change. That's 1 quarter. They could pay off all their long-term debt. Obviously, they're leveraging that, so obviously they won't do that right away. But look, this is no long-term debt for this company, right? 1 quarter's net income could be used to pay off all their long-term debt. So I'm not concerned about that one bit. 254 shareholder equity compared to 251.6. Growth around $2.5 billion of shareholder equity in the span of 3 months. I think that's pretty darn good, folks. I think that's pretty darn good. Now you look at the stock and you gotta say there's some good buying opportunities here, folks. This is a company, Google, right now. I hope you're listening here. Google is going to be, after this, trading at a P ratio right around 21. Dirt cheap, and a market cap at under $1.5 trillion, when this year alone they're probably going to be bringing in $300 billion of revenue. That's right. Forward price to sales on this company, I hope you're ready for this one. This one's a kicker. It's going to be under 5. That is dirt cheap for a company like Google with so many avenues for growth in the future. Folks, this is a company worth buying and holding long term, and you will love your life if you do it. Maybe if you want to wait for the stock split, I get that. But look, there's a lot of great things happening. This is what I have to tell you. I hope you have a great stinking day.